SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. It's Kerry, Lutz, and silver, gold have been pretty active of recent weeks, been going up a little bit. And is it part of a trend, or is it just a one-off deal and we're going to go back to the regular melancholy markets that we've been experiencing for now going on 4 years? Well, David Morgan, you know him well, of the Morgan Report, is here to talk about the trends now. We haven't talked with David in a while. Really happy that you're back with us, David.
Well, Kerry, thanks for having me back. Yes, it has been a while.
But gone but not forgotten. Silver today is right around that $16 mark. Gold, is right around $11.50. Is it the beginning of a trend, or is it just more of the same?
Too early to tell. A couple things. One is until we get over the 200-day moving average, I'm not going to get really excited. I think it's about $11.80 for gold. I forget what it is for silver. But, it's great to see some strength in the metals. We go back just a few days. Silver is sitting there in the 14 level. And now we're up, well over $1 in the last 3 trading sessions. So, the market hasn't closed quite yet. But I'm confident that sooner or later we're going to see, strength in the metals. Certainly, we've seen a lot of strength on the retail side in silver. The backlog at the government mints across the board are significant. And then we keep seeing, more and more people coming in the market at these bargain basement prices. So I think what I said some time ago, that the idea is that by the end of October, we would finally see a shift in these metals markets where the sentiment is starting to change and we start to see some strength in these markets. Having said that, we could get into a pattern that we've seen in the past, get a pretty significant rally, what I call a relief rally, and you see less buying because the prices, let's make up a number for the idea of maybe $17 silver or something, and then the buying subsides and the retail market's able to kind of catch up, and then once that's satisfied, then you might see it, march back down. I have a hard time seeing silver much under 14. I thought that the 14.15 intraday low on the first day of December 2014 was it. It was a spike low. It had all the manifestations of that. And yet we actually tested that level. We closed at a 14.11 mark fairly recently. And of course, that negates what I said, but I'm going to be a little bit bold and say, I'm right so far, because that's a double bottom so far.
Yeah.
It certainly could have been a double bottom, but again, a little too early to tell. I mean, until we get, gold over the 1180 level and it stays there, since gold is, much more sway in the precious metals world than silver does, that's kind of where I'm looking at it. Of course, I'm still more favorable to silver than gold, been consistently that way. But nonetheless, you kind of have to look to Big Brother Gold to make a very confident statement.
Yeah, well, there's certainly enough uncertainty in the world going on. We've got wars breaking out all over the place, David. We've got corporate profits down. We got faith in government at an all-time low. And at some point, one would think that gold would have to naturally go up. I mean, how much longer can it just go along the way it has, and silver too, for that matter, but figuring that gold will probably lead the way, although not necessarily.
Well, correct. I mean, what will happen is what happened in the early 2000s, where you get this huge sentiment shift in the investing community at large, which means you'll see people moving out of equities and into gold. And I've already seen that on not just a personal level, but a little bit of an institutional level with the people that I deal with. Seeing people coming into the gold market, as an example, in a rather meaningful way at these levels and moving, money from the equity side. So I think that's the trend. That's the shift we want to look for. And again, I think that it could be taking place. Certainly looks like it. But I want to be conservative and not, jump up and down and say this is it. I certainly had a little egg on my face a couple of times here, calling the bottom. I mean, if you go back in history, I thought the 1817 low that held for 14 solid months was it. Manufacturing silver, producing silver out of a mine at 18 was very difficult for a lot of primary silver producers. But yet, we broke that to the downside, and we've been down below that ever since. So, very difficult in these markets due to the amount of, paper products that are out that are substitutes for the real thing, and the amount of QE that goes on, and it's benefiting not the, Main Street, but the Wall Street crowd. And so it's not the easiest to analyze any of these markets with those kind of influences. But nonetheless, we have to do our best, and I have. And I think that, again, this could be it. It's certainly been long enough. The duration's been over for 4 years in the silver market, and we're just touching the fourth year for the gold market when it peaked around above the $1,900 level.
Yeah, well, it's... Yeah, if you're a dyed-in-the-wool metals person, it's been a difficult time for sure. But we always say you're buying it as an insurance policy more than anything else. And at some point, that claim is going to come due, and you're going to be much happier having it than not having it. That's for sure.
Exactly. And for silver, really right at the 200-day moving average right now. To backlog a little bit, or backtrack, I should say, silver usually leads gold in these bull market bottoms. And so, if we break through, it's actually 1596 is the 200-day moving average on silver. That would give me further confidence that we're, moving away. But I wouldn't get very excited again to be consistent here. And this is exactly how I would analyze it until we get above the 1177 levels, the current 200-day moving average for gold. So if you had them both confirming, like the Dow theory, one confirming the other one, at that time, and not in that moment. In other words, I'd like to see it trade above the 200-day moving average, both the metals, and establish that area and continue onward beyond it for, let's say, at least a 3-day situation. This is something that I've given to our website members many, many times. I call it the 3-day rule. And this is where you reach a critical level or breakout point, and you establish that to the upside, and it maintains that for 3 days in a row. And if that's the case, the probability goes much, much higher that a new trend is being established. On the downside, it doesn't really work. Markets go down faster than they go up. And so when you have a market break a support level, for example, and it breaks to the downside, usually it can just be a 1-day event. That's all it'll take.
Yeah. Well, we've certainly seen these markets take major hits, for years now. And I think the actual number of people who are interested in metals is probably close to a record low, not seen since gold and silver last peaked, decades ago.
Well, I think the sentiment is still pretty low, but, with the amount that's going on in the retail market, certainly there's this contingency of silver stackers out there that are very savvy, very awake, and very aware. And they are putting, good bids in at these levels, and they're willing to wait, 4, 6, 8 weeks to get product. And I think that's a very strong sign that, silver community and the gold community, of course, but primarily the silver stackers certainly know what's going on, and they're certainly willing to, continue to, ask for metal, especially at these levels. And of course, the dealers are having a difficult time because the market is so tight, much tighter than I've said this for, the last, year or so, much tighter than the price would indicate.
Oh yeah, absolutely. What is going on exactly with the mints in the world, particularly the U.S. mint? Do you think they're going to stop selling silver at some point? They'll just cut it out.
I've always said that. And that's really, when you think it through, is not a very bold statement, because if you go back, and I'm not a big coin collector or know much about rare coins, although I have a few, like a handful of them. But there's no such thing as a certain type coin that goes on forever. In other words, you had the peace dollar, you had the Morgan dollar, and then you had the peace dollar. And, those series went for quite some time, but then they stopped. And so it's pretty easy to forecast that sooner or later, the Silver Liberty, or commonly referred to as the Silver Eagle, will cease. Now, are we seeing that real soon or not, I don't know. What is very tough to determine is, what is the real hang-up here? I mean, the production line can't meet demand, and it's because they don't have enough blanks to punch out, because, once you have a silver round, it's a blank, literally there's nothing on it. It's just a polished 1 ounce piece of silver that's in the right form. Then you just run it through the press and bang, you've got a silver Liberty to sell with a date on it. And the amount sold in September was not that high relative to other months. And what that says, to me at least, is that, well, why were they able to produce a higher amount in a previous month and they couldn't produce that same amount with the demand being so high in September? And, again, I want to be conservative because there could be a very good explanation for it. I haven't heard it yet. There was an interview done by Silver Doctors with Tom Power at the Mint over in the Sunshine Mint. And I know Tom on a personal basis. In fact, I met him when Randy Hardy was actually the CEO. And I've been over there at least 3 times and toured the facility. So I'm pretty familiar with, their process and how much they've increased their production capacity to punch out these blanks in their own products. And still, I question a little bit, as I just said, why is it that, previous months they sold actually more in a month? So, the big thing to watch, and no one has given a satisfactory answer yet, is this market starting to tighten up on the commercial bar side? That's what we really want to know, because that's what the price is set. The price is set on the COMEX, like it or not. That's where it's set and what's it set on. It's not set on silver eagles or silver rounds or 100-ounce RCM bars or any of that. It's set at the commercial bar category, which is, there's just a few concerns that are able to produce what's considered to be good delivery bars. And these are roughly 1,000 ounces. There might be the rare 1,000.00 ounce bar, but normally they're in that range of 990 something ounces to 1,002 point something, whatever. They're rough looking, really, and they are roughly 1,000 ounces. So if that market starts to feel more and more pressure, because that's the beginning. I mean, if you're going to make a Silver Eagle, you're going to buy or have on hand these 1,000-ounce bars. And of course, as I said earlier, I've witnessed this where, they put them in kind of a melting pot, if you will, add a little bit of copper to it.
Right.
And that's where they start the process, and they roll it out in the sheets, and, they punch out the blanks themselves, and away they go. So we just have to wait and see. I can say with some authority that there has been some pretty significant movement coming off of the COMEX from the commercial bar category going to, to be determined. I mean, it could be to large investors, it could be to mints, some probably going to the mints, and where else. So I'm, carefully optimistic, I would say. And again, I'm watching like an eagle on, what's happening on that side of it. Of course, the retail product is extremely important as well, especially if the backlog continues to build. In other words, right now it's estimated at maybe 5 million ounces. But you look at a 5 million ounce factor, Kerry, versus, 750 million ounces being mined on an annual basis, and maybe another 200 million. So have roughly round numbers of billion ounces of silver between mining and recycling. And we're talking about 5 million ounces is causing a backlog in the market for certain product. If you put that into perspective, it's not a very large percentage. But having said that, all markets move at the margin. So even though you have a billion ounce market in silver on an annual basis, doesn't mean that, most of that silver is being very tightly held right now by investors or perhaps even industry, because if the market's tightening up on both sides, retail and wholesale, and you are a producer of some type of silver for industrial purposes, be it shot or plate or wire or all the products that are used by industry in the silver market, that, I'd love to know. Again, I have great contacts. I've quizzed them. So far, I haven't been able to determine anything with saying, oh, no, we're going to buy extra because we see, it's starting to get very tight and we're afraid that we'd have to shut down the production line or anything like that. But it could happen.
Yeah, well, it's certainly a mystery, and I think we are going to find the answer out to it at some point in the future. But like you said, it's not easy to tell because prices being set on the margin and all, where that is. But certainly you gotta shake your head and wonder, why are they having these supply problems? But maybe the price has gone too low and there's just not enough supply at this price. Keith Neumeyer is sure that we're going to have a supply crunch coming down the road. I mean, you see a supply crunch coming at some point. It might be a couple of years, but with production, going lower, even where you have mines where silver's just a byproduct, the lead and zinc and all those mines are really hurting as well with the commodity crunch.
Well, absolutely. I mean, I've said for years that there would be a day or a week or a month. I mean, there'd be a point in time where this paper paradigm would meet physical reality, which means that, at some point, not only are the retail investors willing to pay up to get product, it could happen in the wholesale level. And of course, it could rectify itself before it gets to that point, meaning that the price starts to, move up and up and up, where the market can clear. And that's what we're starting to see these last 3 days. I mean, as a quick example, let's say that silver runs all the way to 20 rather rapidly, let's say, before the end of October. At that point, the demand from the retail side could subside. In fact, I would expect that it would. People that were willing to buy at 16 might say, yeah, it's 20 now, it's going to come back down. So there's not as much, buying pressure on the retail side. And at that point, then, maybe the wholesale side could catch up. The market clears, everyone gets the silver that they've been waiting for, and then the market's more or less in balance again. But again, Kerry, I really think that at some point, due to not so much what's happening in the metals themselves, but what's driving them, which means the global economy and the economic uncertainty out there, because that is so vast and pervasive, worldwide, global, and the advent of the internet and, the cell phone industry. I mean, the instant communications you can get now is, once there was some larger hiccup in the market, meaning the global stock markets, the bond markets, any of the mainstream markets, then the demand for physical metal could go infinite. And what I mean by infinite is that there could be a huge surge in demand from people that are not in today's present market, that are really just kind of waking up to the fact that, oh my goodness, my, IRA is in jeopardy, or, my bank deposit may be in jeopardy or whatever. I'm not forecasting that exactly as far as that's the exact reason. What I'm saying is that the overall financial landscape is so tenuous and so untrustworthy that people will naturally move into something they trust, and there's nothing more you can trust than something that's been money for thousands of years. And that's a very, very simple statement that, most people never really seem to wrap their heads around, because the metals market is so extremely small relative to the financial industry as a whole that it boggles my mind. Once someone realizes what I just said, and it's not just me, I'm just a messenger, one of many, many people have said it, that they get the concept that, wow, I've got something that's been money for thousands of years, trusted for thousands of years, and has no counterparty risk. So that day or week or whatever, I think, it'd be hard to pinpoint it to a day, but that consciousness change, where I don't trust, this kind of an investment, I trust this one more, or as you said, hedge. I mean, I like the idea that it's insurance, but you can have silver in a very robust economy and still make you money. I mean, it's more than insurance. I think it's insurance and something else. I think it's insurance for, a worst case scenario on the fiscal side or the monetary side. But in a non-event, it's still a worthwhile investment, especially silver, because it's used so much in, high-tech applications. So there's a lot to be said for having a position in metals, certainly a balanced portfolio where you don't necessarily overload. Most people listen to shows like yours, Kerry, are enamored with the metals enough because they know enough history of what's happened in the past that they tend to allocate more than, let's say, 10% or 20% into their holdings. And then they are in a situation where they're pretty dependent on what the metals do, rather than having it as just part of their overall strategy.
Yeah, absolutely. Well, on that note, we got to move along. David, just tell us your publications, where we connect with you.
Yeah, the best place is just go to silver-investor.com, scroll to the bottom of the screen, put your name and email in, get on our free e-letter that comes out once a week. You can go to YouTube and type in Silver Guru, or you can follow everything we read on Twitter at SilverGuru22.
All right. And as always, you will find a link to David's site on the show notes to this interview on financialsurvivalnetwork.com. It's great catching up with you, David. Be well, and we'll talk again soon.
Thank you, Kerry. My pleasure.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.